Hello, my name is Axel Piron, and I would like to talk to you about the future of the European post-trade industry, and specifically what is going to be the opportunity and challenges of the Tier 2, Tier 3 smaller CSDs and sub-custodian operating in the European market. We believe the subject is of major importance due to two major initiatives and regulation. The first one being Target 2 Securities, which is an initiative launched by the European Central Bank to create a platform that will handle settlement of CSDs on a pan-European basis. Clearly, the platform is designed to insert the settlement activity from the European CSDs. But not only does it do that, but it also allows market participants such as custodians, broker-dealer to connect directly to the platform to handle their settlement activities. It only focuses on settlement, not on asset servicing. Nevertheless, it's a major attempt by the European Central Bank to create a harmonization and integration of the post-trade activity on a pan-European basis by lowering down the cost of settlement on a cross-border basis. However, this initiative is not sufficient in itself to really drive the kind of consolidation that the European Commission is expecting in the European market. The aim is clearly to foster the same kind of consolidation that has been enjoyed by the US market with the emergence of DTTC. Hence, to complement the Target 2 Securities initiative, the European Union came up with a new regulation called CSDr, the CSD regulation. And clearly the attempt here is to bring a fair level playing field among CSD operating in Europe and foster competition among those CSDs. The first major element in the CSDr is the creation of a pan-European passport for CSDs, allowing them to offer their services, including the services toward issuer, across Europe. However, the regulation also laid down some key principles in terms of risk management and practices for the CSD, notably the fact that in order to provide ancillary services such as securities lending, for example, CSD needs to operate as subsidiaries with a banking license. Also, it lays down the framework for some clear risk practices and risk management practices. The European Commission doesn't want the competition to actually lower down the risk management practices of CSD and drive competition toward less and more risky practices, less secure and more risky practices. However, the reality is that those two regulations aren't applied across the European market in a unified way. If we really look in more detail, we'll see on that map that actually the European market is still a patchwork of different regulation and initiative. If we look at Target 2 Securities, actually 19 markets are participating to T2S, and some of those markets actually are only participating to T2S and not CSDr. If we look, for example, at the Swiss market, 6 is being part of Target 2 Securities, but the Swiss market isn't part of the European Union, hence CSDr doesn't apply. If we look, for example, at the UK market, it's actually the opposite. The UK market is not part of T2S. However, CSDr will apply in the UK. Hence, we still, even with those regulations and initiatives which are there to foster harmonization of practice across Europe, we are still in a patchwork, and it's not yet a European market, but still many European markets. The attempt of the European Union and the ECB to really foster consolidation and competition across the European market for post-trade services is actually kind of a long shot. If we look at the settlement volume already in Europe, we can see that the market is already highly concentrated, with the two major giants that are Euroclear and Clearstream already managing 80% of the settlement volume across Europe. If we look at CSDr, which is supposed to foster consolidation among the CSDs, we can clearly question the final outcome of the regulation. First of all, it is important to note that competition on the issuance business is unlikely to be captured by the major market player. Why? Because the issuance business is highly reliant on the relationship that CSDs have been able to develop with local market participants. Also, we expect to see a similar outcome as the one we've seen with MiFID that has opened up competition for the trading of equity in the European market. The newcomer are the incumbent player that will insource insurance businesses from other market participants, are likely to do some cherry picking and select the most profitable and liquid issues rather than attracting all the issuance from a specific country. Hence, what is very likely to happen is that local CSDs will see a drying up of their issuance activity, but it will not disappear at all. Secondly, the CSDr idea that competition will be fostered and that actually CSD will be able to move along the value chain competing with sub-custodians is quite unlikely to happen. There are many reasons to that. The first one being the fact that actually to provide ancillary services, which are actually services provided by sub-custodians, CSDs will have to operate a subsidiary with a banking license. And we can see here that actually the majority of European CSDs do not have yet a banking license. And that will come quite costly for those market participants, as a banking license means that the subsidiaries also have to operate under the Basel III regulation. The second element is the fact that actually European CSDs, to access other markets within Europe, are often relying on a third-party provider to provide that access. Only a limited number of market participants do have direct connectivities with other markets within Europe. Actually, the majority of market players do not have or may have one connectivity with another market within Europe. And those who actually have multiple connectivity tend to rely on a third-party provider for that. If we look in more detail, we'll see that those third-party providers are actually sub-custodians. And it's not surprising to find within those providers of link toward other market, the usual suspect that you will find in the European sub-custody market, the UniCredit, the Citi, the HSBC, the BNP Paribas and the like. Hence, the ability for a smaller CSD to compete and provide sub-custody services even for its local market participants while relying on a sub-custodians to access other markets is very unlikely. Competing with someone who provides the services that you are relying on is very difficult to achieve. If we look here in detail actually at the kind of services that are being provided by global custodians, sub-custodians, ICSD and CSD, we can see that a lot of those services are actually very similar in a sense. Hence, in theory, the ability for CSD to move along the value chain is clearly a valid one. However, in practice, it is quite unlikely. The global custodians, the large ICSD and the large sub-custodians are likely to capture a large part of the business of the European market post-trade services. Local CSDs are actually and historically being focused on serving the local market participants. If we look here at the chart, we can clearly see that apart from the usual suspects that are Euroclear, Clearstream, SIX, the majority of European CSDs are actually serving local market participants and not global ones. Hence, their capacity to position themselves as an entry point for foreign CSD to enter the European market will be very difficult to achieve. This will require a major change of their practices and culture in order to serve foreign market participants. We can clearly see that the perimeter of activity is likely to decrease very slowly with the implementation of Target 2 Securities and T2S. They will not see the revenue and practices disappear at once. However, they will see a gradual decrease of the perimeter of activity. But they have a lot of assets still in hand that they could play, and they need not to consider alternative strategy. They should think about reinforcing the relationship with the local issuer. Local CSDs have historically been able to develop very rich and sticky relationship with the local economy and local industry. They need to reinforce that and be sure that and ensure that competition for issuance driven by CSDr will not dry out their insurance activity. Secondly, they need to consider targeting the small and medium-sized market. It has been identified by the European Commission that small and medium-sized enterprises are having difficulty finding new sources of funding since the deleverage of banking lending activity. CSDs that have relationship with the local market should think about opportunity to leverage their issuance ability and capabilities in helping small and medium-sized companies find new sources of funding. And this could be complemented with a new technology that has been widely discussed in the press recently, which is blockchain-related technology. Local CSDs and sub-custodians are in a difficult situation considering the current evolution of the European post-trade market. Using blockchain technology is a way to disrupt the current offering and start preparing for the future. That could be coupled with an SME offering. Also, something which is very important to consider is the fact that CSD do have a systemic securities services label, which is very important for fund insurance business and fund managing business, especially considering IFMD and UCITS 5 regulation. That is also something that those market players should leverage in the future. Regardless of expectation, slow change will nevertheless be brought to the industry by the Target 2 Securities initiative driven by the ECB and by CSDr. The emergence of an integrated European capital market is still a long way ahead, but we will slowly see the perimeter of activity of the local player diminish gradually. A wait-and-see approach is not an option. Winter is coming for the local players and they need to act on it. However, they do have a clear asset in their portfolio and cards to play in the future. They should consider developing complementary services rather than competing one with the largest player. There are still time ahead to be planning for the future. If you have more questions or if you want to discuss in more detail some of the findings of our research, please feel free to contact me at the email below.